fantastic. All right. So there it goes. Our quote for the day is once it clicks, the years of failure become insignificant. Trust me, there is no better feeling in the world. This is year number 4 of my trading, ladies and gentlemen. I'm getting close to 10 years of trading experience. This is year number 4 after I had switched off my social media and unfollowed a lot of these influencers because they wasted my time. I don't want to lie. Every day there was a new guy popping out. And the thing about social media, we do not know how real those results are. Some of those people don't even want us to do video calls. They don't want to do live sessions like this. But you see this guy making millions every day. And question to me is, if you're making millions, let's be honest, if you're making millions of dollars, is there a need to still ask for people to pay for your course, for your subscription service? I know it's extra cash. To me, it's not. Trust me, ladies and gentlemen, as soon as I make 100,000 US dollars a month, I'll continue do these live sessions in your honor. But as you guys have seen, I haven't posted any profits in a while. There is no need to prove that you're good. Once, if you know that you're good, there's no need to prove it to anyone. There's also no need to beg for people to pay for your courses. Hence, I haven't marketed my course in a while. I'm not saying I'm better than anyone, but let's be honest here. You won't have time to ask for people to pay you $30 when you're making 100,000 every month. There's no time for that. So once you get over the search for the holy grail, looking for the best strategy, trust me, once it clicks, that aha moment. For me, what made that click was risk management. I don't want to lie. I was trading a different strategy from supply and demand, even though I was initially introduced to supply and demand, and then I got hooked into these other strategies along the way. Not to say they are not profitable. I think it depends on the trader. I think there's a question. So that means it's true because these people are greedy, if not scammers. 100%, 100%. And I've seen a lot of it. Also working on the back end of brokers, I've seen these people posting profits on Instagram, but you go on the back end, check their accounts, their account is blown. And then you ask yourself, where is this 100,000 coming from? That he's showing people, join my signal group. Also, I don't want to do that. I don't want to be the guy who says, join the link in the description below. I've had serious meetings with some of my sponsors in the sense that you're not taking people to the link, this and that. It's because I want to be different. I just want to give you the information. And if you feel like it's okay joining me on a certain platform, it is your choice. I won't force people to do that. Like literally, like I said, I'm not a millionaire yet, but I'm okay. I'm not a millionaire yet, but I've gotten to the point where, not financially, the skill, I know the skill will take me wherever I want to go. So there's no need to be taking money from people. Also, there's funded firms. I'm coming up with my own prop firm very soon. I'm going to be launching that together with a broker. With prop firms, if you fail to acquire funding from prop firms, that means you're not good of a trader. So there's no need to go take 20,000 from your family member. There's really no need. That is a sign that you need to work on the skill more. So yeah, let's get to trading economics. German factory orders rebound strongly. Factory orders in Germany rose by 2.9% month on month in June 2024, above market forecast of 0.8%. Now, this sounds like gibberish to so many people, even to me when I started. Hence, I always say, do not focus too much on the news. I can see that so many people are looking at what caused the current crash that we're in. There's really no need to understand that. What you have, the broker has, the market maker has, the exchange has, and the big bank has. It is the chart. Just understand what is happening on the chart. When you see so many people selling, be ready on the other side to buy. This is the one way I can help you guys navigate the current crash. Get ready to buy, ladies and gentlemen. Warren Buffett's famous investment strategy is Be greedy when everyone is fearful and be fearful when everyone is greedy. Right now, everyone is fearful. We see by the orders in the markets, everyone is selling. Now it's time for me and you to buy. This is where we walk away with the 1:30 risk reward ratio. I mean, if you're risking 0.5% on that risk reward ratio, you can easily make 15%. And 15% of $100, it is $15. And 15% of $10,000 now, that's 1,500 US dollars. So I'm saying that to say, do not risk too much with the idea of trying to make a lot over a short space of time. This game is a game of scaling capital, not increasing losses, the lot sizes. You won't stay in the game long enough. You're gonna blow accounts to the point where you get discouraged. You know, I spend so much time healing or helping people go through their past trauma of blowing accounts than teaching them actual trading, because they just can't stick to discipline. Discipline is everything. I was talking to one gentleman who's going to be one of the leaders in this community yesterday. And I said to him, he was worried that he doesn't have money now. Money is not a problem right now. If you have a plan and discipline to follow the plan, I can guarantee you're going to get there. This is how I move in my life. This is how I do everything. I mean, there was a time even when I was in uni, when I left uni, the people I was with, the unit graduated later, got job first, bought cars, bought houses, and all of that. And I told them, I'm gonna stick to my plan. I know this thing is gonna work, and I'm not stupid. I trust God. I also trust God. So that's my other my other superpower. I trust God blindly. When they talk about walking by faith, not by sight, that is me. Once God says we're going there, I am going there. You can't tell me nothing. All right, let's look at the markets now. Dollar index, we saw a very big drop. Let's look at it from a monthly time frame. Remove that arrow before it confuses people. Okay, let me see if I can get a, yes, full screen mode. We'll try to go through this as fast as possible. Hold 15 minutes to go through this. Let that arrow go. There we go. On a monthly time frame, we are bearish. What is that saying to me and you, ladies and gentlemen? So last month was bearish as well. This month is bearish. We need to be looking for selling opportunities here, according to order flow, according to the trend. Oh, someone's saying they still see Telegram. I'm sorry, ladies and gents. We have moved on to the chart. Yep. I hope you guys can see the chart now. Can you guys see the chart? Give me a thumbs up so that I can carry on. Fantastic. All right. So with trading, it's either you can you can hate the player or you can learn how to play the game. There's a game being played here. When the market is going down like it is right now, a lot of people are selling, and they'll end up getting caught on the wrong side. And then they go call their mentor. You said, I must follow the trend, sell when the market is going down. But I keep on losing. Why? Because they do not understand the dynamics between buyers and sellers. Here's how it goes, ladies and gentlemen. For you to buy, or let me start here, any marketplace, the main objective of a marketplace, it is to reach equilibrium. What do I mean by that? A buyer needs to meet a seller, and a seller needs to meet a buyer. I'm going to end it here. This nested drawing of mine. I'm giving you a preview of the Pro Traders course now. This is also almost the same thing as discount. Let me try to do something like that. Yeah. discount versus premium prices. I'm going to be quick. Today is going to be more of a lesson because really, so far, I haven't seen a good opportunity. I missed, I took USDcad. Actually, it took me out on a stop loss. It was basically too tight. So what is this? This is discounted price. I wonder why this thing is disappearing. Okay. And this is premium. Hope you guys can still hear me. Let me move this a bit. So any marketplace was created originally for the market to reach equilibrium, which is this point. As you can see here, this is where every buyer meets a seller, consolidation, right? This is a fair market. We also call it fair value price in order flow terms or supply and demand terms. So where do the opportunities lie? The opportunities lie where the market, there's a glitch in the market or where the market is out of balance now. Okay, so this is where the reason the market dropped here, it is because supply was greater than demand, hence it dropped. The reason it pushed up here, it is because demand was greater than supply. That's why this market pushed up. Okay, equilibrium, this is where everyone is happy trading. This is where you like your price of bread to be, right? You don't want your price of bread to be 30 rands and one day 18 rands. There's a huge fluctuation. At least you can deal with 18, 19, 20, 17, somewhere there. This is fair value. This is where everyone is happy trading. This is a fair market. Where we trade, me and you, excuse me, I've got a flu. It is where at the extremes where the market is out of balance. Right here, supply is greater than demand, hence price dropped. Right here, supply is equal to demand, that's equilibrium, hence the market is moving sideways. Right here, the supply is greater than demand, hence it dropped. Right at this point, demand is greater than supply. So we want that imbalance for us to trade, SMC people. So what normally happens is, for me to buy, I need to see sellers coming in first. Hence, I'm saying these conditions are favorable for me. I posted on my Instagram that this is good news, and someone was like, you're selfish. About 1.9 trillion US dollars was lost in the markets in the past 3 days, and you're saying it's good news. Well, for me, not everyone's strategy works every time. For me, this is when my strategy works well, because when I see so many traders selling, I know that my risk reward ratio on the other side is going to be huge. This is what people mean when they say they trade like the banks. But I refuse to say I trade like the banks because I do not have their balance sheet. I also do not have their human capital. I do not have their expert advisors and whatnot, or their hedging strategies. However, it is very hard for them to hide their footprints in the market. So with dollar index, I'm looking at this demand area. As far as supply is concerned, the furthest is this one. Halfway through, it will be this drop-based drop right here. Still 105. I'm still hoping the market gets to 105. So let's look at it on a daily. So we're bullish on a weekly, bullish on a monthly. So let's look at it at a daily. Yep, I am looking for this to further drop down here. So two things can happen. It can further drop to 101 and push up, or it can start by going to 105 and then dropping further down. So 105 being this level here. So I've been calling this level. Last week, we didn't get the market returning and the market decided to turn at 104,800 and dropped further to the downside. Still, my level is valid though. I'm still going to hold on to that. So it's either we see the market pushing up first, pushing down and up, or pushing up and down. So yours is just to wait. here's the beauty of not having a bias in the market. It is we are going to be able to read price for what it is, not what you think. Okay. Do not have a bias that the market has to do this and has to do that. You're not in control. This is something that I've learned over the years, that I can never be in control of this market. Just wanted to define this area. I'm not happy with it. Nonetheless, it is a supply area. Okay, so let's look at USDCAD, the entry that I missed. Let me know what pair you'd also like us to look at today. Like I said, I have no particular USDCAD, and this was spotted on a 5 minutes. Remember, I do not trade the 5 minutes. The buying opportunity rather was spotted on a 5 minutes because we had, I'm just sharing my supply and demand tips, as you can see. So there was that demand there, and price came to it, tapped into it. My stop loss was a bit too tight here, and I got taken out. It's still okay because I feel like this market will come back and offer me another opportunity. There is another thing, fear of missing out. Let go of the fear of missing out. I think if this market comes back here, I'll take another opportunity or another buy opportunity. We have less than 10 minutes, ladies and gentlemen. I've spent too much time teaching. My wish it is to do this more of these sessions for free. I'm happy with the reviews that I'm getting from you guys. So if it comes back again, you can still get a 1:14 there. Aiming at this high is probably 1:15. Absolutely. Risk 0.5% there. You walk away with 7.5% as a potential reward. You do not need to aim for the fences. So this is what I have. I think there's also something that I saw on gold. I think let's go through gold. So one of the reasons I'm not panicking right now because of what's happening in the world, it is because gold is considered a safe haven currency. So we had that reaction to 2480 last week. My next area, it will be here. Why this area? Look at how price left that area. It is only banks or big institutions, big players that have the ability to push the market like that. If you go to my Instagram and look at all the pairs that I've shared there, the befores and afters, one thing is common. Look at how price left the area in a quick fashion. So it's a sign that banks are involved. Why am I not looking for a demand or a supply here? It's fair value. This is where people are happy trading, right? So I want to trade at the extreme, trade a glitch. Hence, some people trade gaps, ladies and gentlemen. So with gold, I also have a demand right at, I think around 2,350, somewhere here, a demand level here, and that I think gold has to tap into. Once again, it's either it comes down here first or it goes there. Whichever way, I have my points of interest now. I'm just going to wait for price to play out. Either it comes here, it goes there. I hope that is insightful, ladies and gentlemen. But looking at where, oh, sorry, I was explaining why am I not panicking to think that there's something really, really bad in the world happening, even though there is a lot of things bad happening. We've got the riots in the UK against immigrants. We've got the riots in Bangladesh. We've got the war that's still continuing between the Hamas and Israel. It's the Ukraine war against Russia has never stopped since it started. So yeah, we do have those a lot of those things, and it's uncertainty coming from the US pre-elections. So there's so much, and imagine you're worried about all of that. you will be crippled in the sense that even if an opportunity appears right in front of you, you want to execute. Why? Because you're thinking of all these different elements. That is what we call analysis paralysis. So hence I just focus on the chart because it is the one thing that everyone has. That's a fair market, right? So yeah, with that said, ladies and gentlemen, on a sell, let us see a potential risk reward we could obtain from this. My chart is reloading. Unstable Wi-Fi. Okay. You can get a nice 1:8, close to a 1:9. On the buy side, potential. The reason I'm showing you this, guys, is the power of the strategy that we use. You do not have to be stressing yourself or taking 20 trades in a week. Guess what? I aim for 3 trades in a week. Just 3, I'm good. And out of those 3 trades, I just expect 1 to win. Not all of them. 1 winning, I'll be profitable. Just like how it happened last week. I lost all the other 2, then I won the S&P 500, and such I'm 8% in profit. So yeah, it's the power of this will help you trade with less stress, especially with people who have jobs. And myself, I'm currently running the brokerage, the development of the prop firm. It takes a lot of time. It's consuming psychologically. Sometimes I don't even have enough time to check the charts, but I always make time for you guys. That is to say, you can just place a trade and forget, hence the name sit and forget. Why forget? You've calculated your risk. Everything is okay. So yeah. Shani says, what is a mitigation block and how to trade it? It's SMC stuff. You're welcome, Eddie. You're welcome, Eddie. Let me do this for Mr. Dlamini, a mitigation block. Let us assume the market was going up like that, and it pushed lower, and now it's playing like that. So a mitigation block, this is just supply and demand. People are complicating this thing for you guys. So a mitigation block, it is the original place where the trend started. For me, it is up there. Probably there is another mitigation block here, but I'd always choose that one. Why? Because premium prices or retail prices, you'll never buy a car, let me say at 20,000 and resell it at 18,000 or resell it at 22,000 when there's the option to resell it at 25. You get me? So hence I'll take that one. Mitigation block, you just need to see the market coming back to that, and then you can sell. And this also proves my point of my earlier theory that for you to sell, first, the banks will sell. You can't sell with them. They don't tell anyone that we're selling now, but we can see their footprints, right? And once they sell, you just wait. You look at where the market started or that big push or that big sell started, right? Just like right here. And you are going to wait there for the market to come back there. Why? Because the reason the market pushed lower, it is to find more buyers. Why? Because the orders that the banks put in here, they are in numbers, they're quite a lot. So there was not enough buyers to meet them. So price has to go down because lower prices favors buyers. That is how price will find the buyers. And then when it comes here, the mitigation, basically, it is filling of the excess orders that were left by the big players here. It is the same thing. Don't confuse yourself, Mr. Lamin. And what you guys also need to understand is people in trading in general, they are going to come up with these new words, new strategies with the idea of tricking you to think that this time around it's got something new and it's powerful. And it's never a lazy name behind it. It's always what are these robots called, man? Power what? And then sometimes they use someone who's big in the industry. Nikonati Timoshi, whomsoever, the guy who founded the Bitcoin. There's always a game being played behind the scenes. There's always, again, you're welcome, Mr. Damin. So you must always be wary of that. So Kutale says, what if the time the market gets to your levels that you have been waiting for the time frames is not aligning? What do I do? Well, you can't pick a specific time, Kutala, because once again, we are not in control of the market. Hence, I then place my limit orders. I place my sell limit or my buy limit so that when price gets there, it executes. Why am I comfortable setting that? It is because one thing first, I understand that I do not have to know what's going to happen next for me to make money. And whenever I place risk, I accept it. We have less than 1 minute. I accept the risk that at this point, should the market invalidate my original analysis, I stand to lose 0.5% of my account, 0.5%. I still have 99 and a half of my account. I can live to fight another day. That is okay. So always put your levels because you do not know when it's going to happen. I've had levels that I thought that it was going to take weeks for the market to get there, and it took 1 day, 2 days. So you can never be sure of the time. I hope I am making sense to you. Ladies and gentlemen, it is always a pleasure. Once again, I always share on the Telegram group. I've shared my personal details. Do contact me if you have any problems. I may respond immediately.